very important to start right here, okay? What I'm showing you here is where stocks were, right, in Q4 2021 and where they were in Q4 2022. And what you're going to find is, stocks like Netflix, Nvidia, Meta, Shopify, those stocks fell like 60%, 70%, peak to trough. Absolutely got decimated, right? So one way you could have got filthy rich is you could have looked out there and you could have said, you know what, this whole inflation thing, because at the end of 2021, there was an argument being made by the Federal Reserve and by other investors that, inflation is just transitory. It's all going to be good. We're all going to be fine. And the market just went to all-time highs after all-time highs all the way into the end of 2021. If you would have taken the opposite approach there and said, you know what, I don't think this inflation is transitory. I think the Federal Reserve is going to have to start raising interest rates and then raise interest rates dramatically, right? You could have bought one-year output options and got absolutely filthy rich, because you got to understand, no one was planning on Netflix, Meta, stocks like that falling over 50%. Never mind 60 and 70 and 80% falls. No one was planning on that. So if you had been buying put options going into 2022, like that was certainly a way you could have got absolutely filthy rich. Sometimes you got to look the opposite way, and if you see a problem that's emerging out there and no one has noticed it yet, then you're on to something. Right? Now, since then, we've seen this happen to those same exact stocks. Shopify is up 188%. Netflix is up 232%. Meta's up 558%. Nvidia is up 655%. And that's after this correction we just had, where actually the Nasdaq's down about 16%. The Nasdaq's down about 13%. So even though the Nasdaq's down that much, you've still gotten that for gains, right? So there's been fortunes made on the long side. You don't even have to play call options coming out of that in 2022, right? Certainly if you play call options, 1 year out or 2 year out call options, which you can get leaps easily, because also no one was anticipating at the end of 2022 that these sorts of stocks were going to jump 2x, 3x, 4x, 5x over the next year or two. And they all ended up doing it essentially, right? And so that's a way you could have played it, or you could have just bought the stock straight up and made absolute fortunes, like, folks like myself are fortunate to have made, right? Where you put, $100,000 into one of these stocks, and next thing you know, it's $500,000, $600,000, $700,000, right? And in a pretty short amount of time. Now, what everybody was telling you to pile into at that particular time was what type of stocks. If you watch my reaction channel, I react to Wall Streeters all the time, and I actually started that channel in 2022. It's a perfect year to start it. And back then, the Wall Streeters were all saying, you need to be piling into oil and gas stocks. You need to be piling into, stocks like McDonald's, Starbucks, those sorts of companies. Because also people were thinking we were going to have a recession in 2023. So people are like, we got this inflation, we're going to have recession, maybe we're going to have stagflation. Like it's ugly. So go to safety plays, go to Starbucks, go to McDonald's, go to oil and gas stocks. Forget Meta, forget Nvidia, forget Netflix, Shopify. So if you had done that, the stock price performance you would have gotten, let's say instead of buying Nvidia, Meta, Netflix, Shopify, you said, you know what, those are such great companies, such great growth companies that have growth for the next 10, 20 years. But you know what, I'm not going to buy those because everybody's freaked out short term. I'm going to buy McDonald's and Starbucks and ExxonMobil and Chevron. You have 15% gains in McDonald's. You have 10% gains in Starbucks. You have negative return in ExxonMobil, and Chevron's giving you negative 14%. This is where it matters significantly where you're allocating money in a correction or a bear market. Because I can tell you, if you're buying those stocks, you have little to nothing to show for it all these years later. However, if you were buying Shopify, Netflix, Meta, Nvidia, those sorts of stocks, you have fortunes of gains you're sitting on, even after this 13% drop in the Nasdaq. I mean, the Nasdaq could drop another 13 percentage points, and you would still be far exceeding any of these other stocks. Literally, you could have the Nasdaq drop another 13% from here, and then go down 26%, 27%, whatever, and you would still be looking great. You could have the Nasdaq honestly probably fall 30+%, and you would still have done far better if you were buying Nvidia, Meta, Netflix, Shopify, those sorts of stocks, versus buying ExxonMobil and all the ones that, hey, get a double cheeseburger and a double pump latte, okay? Come on, man. You got to know what you're doing in this game, right? No, the hated stocks, I take you back to the great financial crisis and show you this once again, right? You got to understand, it's not just about allocating money. And basically, that's just a fancy way of saying investing money into stocks during a bear market or a crashing market or a correction market. It's about understanding where the best opportunities are in there. So now I'm taking you back to the great financial crisis, okay? Which, there's probably not that many people watching this right now that you were investing back in the great financial crisis, right? It might be 10% of the viewers right now were investing back then, right? So back then, you could have invested, let's say fall 2008, the whole market's in a crash, blah, 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 right? You could have picked the stocks that people were loving at that time. What were the stocks all the Wall Streeters were telling you to invest in at the end of 2008, 2009? If they were telling you to invest in anything, they were saying buy safe companies. Buy Johnson & Johnson, buy Procter & Gamble, buy Walmart, buy those sorts of stocks, right? Kraft Heinz was one that was very popular back then. Those sorts of companies. I don't even know if it was Kraft Heinz back then, actually. It might have just been Kraft, ticker symbol KFT back then. Those are the stocks that all the Wall Streeters are saying, if you're going to buy anything, buy those stocks, okay? You could have went that route. And what did you make over the next few years, right? Because I took this all the way out into 2011. You made a whole 3% on Johnson & Johnson stock. You made 1.7 percentage points on Procter & Gamble, and you made 1% return in Walmart. What did you make if you were investing into, let's call it growth companies back then, or the hated stocks during that crash? Well, Netflix gave you a return of over 10x over the next couple of years. It returned over 1,000%. Amazon returned you 375%. Apple returned you 296%. Remember, Apple back in those days was a major growth company. It's very different than the Apple today, where we look at it as just kind of like, value stock, dividend stock, kind of boring company. Apple back then, that was still the Steve Jobs days. That was iPhone starting to take off, iPad starting to take off, all those products, right? 296% return that gave you. Goldman Sachs and JP Morgan, no one wanted the financials in the fall of 2008. You could not find a soul on Wall Street that would have told you, go buy JP Morgan stock, go buy Goldman Sachs stock at the end of 2008, going into 2009. No one would have told you that. But if you had bought those stocks, you got a 191% return in Goldman Sachs. You got a 97% return in JP Morgan, right? And the stocks they would have told you to go buy, these are the stocks you go buy, Johnson & Johnson. You got nothing. You had nothing to show for it. This is why millionaires are made during these corrections, during crashes. Because if you know where to invest, you know how to find growth companies that are trading at ridiculous discounts during that particular time, you know how to find some incredible opportunities out there and some hated stocks that no one wants to own, that's where the biggest money's made. And that's where you see ridiculous inflows of money for the next bit of time. So remember this whenever you're going through corrections or crashes in the market. When you're in a correction or a crash in the market, buy growth stocks and hated stocks. It's going to be painful as you go down throughout that, right? Let's say, you're buying stocks and the NASDAQ's down, 12%, and NASDAQ ends up going down 30%. As long as you're buying that whole way, it's all gravy in the end. It's all good. You want to buy the growth in the hated stocks. That's where you're going to make the most returns as you come out of that correction or crash, right? Then, when you're late stage into a bull cycle, let's say it's been multi-years, you've been moving up, that's when you really want to start buying dividend stocks, value stocks. You want to start hedging. Because remember, when you're late stage in a bull rally, no one wants to own dividend stocks. No one wants to own value stocks. People are like, dude, I want the growth stocks. That one over there, that stock over there is up 400% in the past 15 months. Give me some of that. That's the easy money. People don't care about dividend stocks and value stocks when you're late stage in a bull market. That's exactly where you need to be flowing money into. Hedging opportunities. When you're late stage in a bull market, everybody forgets to hedge. No one wants to hedge. No one thinks the VIX is going to go crazy. No one thinks anything bad's going to happen, right? Because it's just gone up and up and up for several years. That's the time you hedge. And you can hedge for so cheap. Look back in December 2024. Look back at January 2025 and how incredibly cheap it was to hedge a portfolio. Oh my gosh, you could get insurance for so cheap. You get put options for so cheap because everybody just thought, Trump's getting in office and the market's only going to go up every day and no drama, no. Oh yeah, okay, hedge. And then buy what is already crashed in as high quality companies that have long histories of being high quality companies. You want to buy those when you're late stage in a bull market. That's when you see some incredible opportunities, and I can show you just that. Look at this. This is over the same time the NASDAQ has fallen 13%. A major drop, a good-sized drop, we'll call it that, for the NASDAQ, right? Look at EL stock. Look at ELF stock. Look at Nike stock. Nike stock is flat, while the NASDAQ's down 13%. ELF stock is up, while the NASDAQ's down 13%. And EL stock, Estee Lauder, is up 1%, while the NASDAQ's down 13%. What? What are we talking about here? Why is that? Those stocks already crashed. They already went through it. They already experienced what the market experienced just before the market experienced it. And so those ones are hard to get any more selling pressure because everybody that wanted to sell EL and ELF and Nike, they already did it over the last year, if not the last 2 years. They flooded out those stocks and couldn't just sell enough shares for the last year plus. And so now those stocks aren't even going down anymore. And yet the market's getting trampled. And you're seeing all these other stocks that were the hot stocks falling 30%, 40%, 50%, 60% falls, right? Dramatic. So you look at what I was buying over the past few months, right? I've been banging my hand on the table in regards to EL, ELF, Nike, these sorts of stocks recently, right? And if you've been watching my content over the last several months, people say, oh, you only talk about the same 10, 20 stocks. Well, I'm not just going to talk about trash. I'm going to talk about companies that I believe are going to go up significantly over the next number of years. And so I'm not just going to talk about stocks to talk about stocks. Go watch another channel if you just want somebody to talk random stocks. Go watch CNBC and Bloomberg if you just want random stock talk. I'm going to talk about companies that I believe are going to do tremendously well or tremendously bad over the next few years, because that's what actually matters. That's what matters in this game. And so, yeah, I've been talking about those stocks a lot the last few months, and I was buying them, and I'm making it through this just fine. Meanwhile, the stocks that everyone's been piling into over the last couple months, the end of 2024, beginning of 2025, look at what these stocks have done with this 13% correction in the NASDAQ. Coinbase is down 31%. Palantir is down 37%. Tesla's down 38%. Hood's down 40%. Hims is down 50%. AppLovin's down 53%. Incredible falls, right? You got to understand the stock market, you can make more money than you ever dreamt. More money than you ever dreamt. And I can tell you, if it wasn't for the stock market, there's no way I would be able to live the sort of lifestyle I have and have this sort of money. It'd be impossible. No way. Not for a community college dropout like me. But because of the stock market, I've been able to, been fortunate to amass an incredible amount of wealth, right? If you want to gamble in the stock market, you will pay the price. And it's a big price to pay. And what has transpired, and I've been calling this out for the last several months, is a lot of people started to really gamble in the market. They didn't understand how to value a company. They didn't understand any of this, the actual fundamentals around the stock market, how to be a successful investor. And they're paying the price big. Big, big. Not small, big, big. They've lost 30, 40, 50, 60% of their portfolio. Some were going even heavy into margin, and now have gotten margin call after margin call after margin call. Some were going heavy into call options, and now all those options have expired worthless, and they lost 100%. Not even like they went down 30 or 40 or 50%. No, some of these people are down 100%, and it's not coming back. Some of these people have gotten margin called and lost 70% of their portfolios, 80% of their portfolio now because of this, right? You gamble, you will pay the price in this game, right? Stock market can be incredible, though. You can make more money than you ever dreamt in this game. But you kind of know what you're doing. And you're just gambling around, you're going to get gambling results. No different than somebody going down to the casino and they take $1,000 with them, and then they come back at the end of the night and they got nothing to show for it. Dang, I lost my $1,000. You gamble, you're going to get gambling results. And what's the only way you win when you're gambling? It's one way. You get lucky. That's the only way. That's the only way. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Getting started here right off the top. It's very important we start right here. The Russell 2000 as of this morning, it's almost in crash territory. It was down well over 18% from the recent high. So that would be I would categorize that as a major correction, not a minor correction. That's a major correction, the Russell 2000 we've seen over the past few months here. Almost a crash, not quite there, right? But if you got this baby down a few more percent, we'd enter actual crash territory on the Russell 2000. So pretty ugly, right? And then as far as the NASDAQ goes, as of this morning, NASDAQ down about 14%, which I would categorize that as a major correction for the NASDAQ now at this point in time. Now, S&P 500 as of this morning was down a little over 9%. So we're almost into major correction territory with the S&P 500, but that is still in minor correction territory. Anything less than a 10% drop is minor correction, okay? Now, if you look here, this has gotten very interesting. The last stock that had really been holding up decent it's fallen. Apple trading 220 this morning, and that was a stock that just back on February 24th, so 2 weeks ago, that stock was $247 a share. So we have lost Apple now at this point in time, and that was the one stock that was actually holding up decent, right? Nvidia was getting hammered. Tesla, Meta was starting to fall, all those stocks, and Apple was the one holding up. Not anymore. Housing stocks continue to get hit, right? Look at Enphase here today, down another 5+%. That one's been trading even in the 50s here recently. Whirlpool getting hit again. RH getting hit again. So all the housing related stocks continue to get hit. And to be quite frank, those ones might continue to be in a tough place for quite some time, right? We're obviously getting news like this. Airline CEOs warn domestic travel, which is just a fancy way of saying USA travel, demand is slowing. Delta, American, Southwest have cut their first quarter forecasts. Government travel has also slowed, executives said. So obviously Delta, American Airlines, stocks like that getting hammered here today. And listen, then that leads perfectly into recession, right? I mean, at the end of the day, if airlines say, hey, demand's not there, people start getting real freaked out real fast about recession, right? And so very, very natural for that to happen. I posted this. I'm not sure if you guys follow me on X. I always have my X and my Instagram linked in the description area. Not sure if you guys follow me on X or not, but I posted this one just a couple hours ago. I said stock market crashes usually last 300 days. Now, we might not be in a stock market crash right now. This must be a correction, right? And I'll show you how long corrections last here in just a moment. But let's say we're actually have entered into a stock market crash, which once again is very debatable. But if that does happen, you could say we got many, many months of just a kind of an overall downward move. Now, in stock market crashes, it doesn't mean the stock market goes down every single day or every single month or every single week. But the gist of it is it goes down and down and down over a given period of time, right? So I posted that. But the more likely probability, the higher probability here is we're not in a stock market crash right now. We're in a stock market correction right now, right? So how long do stock market corrections last? Well, stock market corrections are pretty darn quick. The average fall in a correction is 14.1%. Okay. Now, and you could say the NASDAQ already hit that basically today. So S&P 500 is still, about 5 percentage points away or so, right? Now, the average recovery time takes only 4 minutes from a correction. Once again, we're likely in a correction. There's no guarantee. Maybe we're going to be in a crash, but much higher probability is, I would say 80% probability we're in a correction right now, 20% probability we're in a crash. So in the 80% probability camp, like this correction's probably about over now at this point in time, or ending very, very shortly here. If it's not over now, then it's going to be ending very, very shortly. And essentially we'll recover strong over the next 4 months, essentially. So do keep that in mind, right? Now, this is where things get really fascinating and really scary. And I mean really scary. Check this out. This just came out 15 hours ago. Total U.S. put option volume just hit the highest level on record, according to Zero Hedge. Shorts are going all in. All in. Oh boy. Oh boy. They just loaded the boat on put options. Oh my gosh. Woo! You want to talk about getting set up to get wrecked? Oh my gosh. Okay. So, now for these individuals, you got to understand, everybody loading up highest volume, highest level on record. People loading up on put options yesterday. And I'm sure they were loading up on put options this morning as well. Have you seen the VIX? The VIX is very high. It's the highest we've seen it in a long, long time. Which means all these people buying put options yesterday and today are all buying them and likely having to pay insane premiums, which means now these individuals need a full-on stock market crash to make any money. This correction is not going to be enough because of how much they're going to have to pay on premiums. So now if hypothetically over the next month, over the next few months, for the remainder of this year, let's say the stock market doesn't go down, and let's just say the stock market's flat. These individuals are going to lose 100% of what they just put into those put options. 100%. Not like, oh, they go down, you buy a stock, you buy, Apple stock, right? And stock price goes down, short-term correction in the market, crash in the market, whatever. You go down 20%, 30%, 40%, 50%. Okay, as long as Apple does their business on a high level over the next few years, you'll get the money back, right? And then some. On these put options, if it doesn't go your way, you lose 100% and you can't get the money back. There's no recovery time. So all these people loading up on put options that are going to expire next month, 3 months out, 6 months out, 9 months out, right? If the market doesn't crash in the next few months, they're going to lose 100% of what they just put in. That's what we call getting real wrecked. Real wrecked in this game. There's only a few ways you can get wrecked in the stock market, right? And two of the main ones I've seen people get wrecked in is one, they go margin. So it means they're taking out debt to basically invest even more money or trade with even more money. That's how you get wrecked. And the other is you load the boat on put options or call options, thinking the market's going to continue to go away it's going, and then you get wrecked and you lose 100%. So these people are now have to have a stock market crash. They don't have a stock market crash, they're wrecked because the premiums they had to pay yesterday, astronomically high, and same thing with this morning, astronomically high. Now, to make matters even worse, I could show you what happened in 2018. 2018, there's a lot of similarities between what's going on this year and what happened in 2018. A lot of similarities, right? But in 2018, early in the year, people thought, oh, we're gonna have a crash, right? Because the market sank rapidly at the very beginning of 2018. And people are like, oh man, we're gonna crash. The market's just entered a crash phase, right? And then the market came back extremely strong. People are like, whoa, what the heck? Shoot, we are wrong about that. And then it fell really rapidly again. And then people came out and start buying puts. I told you, I knew this market was going to tank. Boom, here we go, baby. Big crash incoming. And it didn't come. And you know what happened? The market raced to all-time highs over the spring and summertime. And those people that were loading up on short positions and put options when the market was sinking here think we're about to go into a full-scale crash because Trump is doing tariffs and blah, 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 and Trump did this and Trump said that and Trump. And what happened? They got a pie in their face. All-time highs in the market, right? Oh my gosh. And then we actually did have an almost crash at the end of 2020, or at the end of 2018. It was an almost crash. It was a major, severe correction in the market we had at the end of the year. But in the meantime, all these people that loaded up on puts and short positions thinking we're about to have the crash just absolutely got obliterated over that spring and summertime. And who's to say that's not going to happen this year? Who's to say that's not going to happen, right? Listen. What do I always tell you guys? The biggest companies in the stock market, right? The biggest companies in the stock market are the ones that are the big tech companies, right? The ones that matter most. Are their earnings going to magically just completely fall apart? Is that going to happen? I don't think there's a very high probability of that, right? And so their earnings are probably going to be fine over the next few quarters, right? They already kind of sandbag guidance a little bit. And so if you're hoping Meta's earnings just tank and Amazon and Nvidia and all those companies, it's always a possibility, but I'd call it pretty low probability, right? And so that's going to come out. Tariff situation's probably already at max fear, just to be quite frank. I can't see it getting much worse in regards to tariff fear specifically, right? And all this Trump drama, I feel like we got a lot of Trump drama going on right now, a lot. And I feel like if anything, that's going to subside over the next few months. And so all of a sudden people start looking out there and saying, okay, wait a minute. We got all freaked out. Trump was this, Trump was that, Trump, Elon, Trump, Elon, Trump. Oh my gosh, what did we do? We went all heavy on puts and we sold out of everything. What did we do? That's what happens. That's exactly what happened in 2018. And people were like, whoa, crap. Think we screwed up here, right? Now, the Fed, with all this drama going on that we have right now, let's be very clear, we could have more cuts coming. We could very well have a lot more cuts coming. And that's a little different than 2018. In 2018, you had a Federal Reserve that was, kind of hell-bent on raising interest rates. They thought they were behind the curve. They wanted to raise interest rates. Now, we've got a Fed that's actually got our back. And so if there's a lot more drama, a lot more market volatility, a lot more fear about recession, right? Some bad jobs numbers come out over this next couple months. Fed's going to be much more ready to cut for the remainder of this year. And you could see several 50 basis point cuts this year. No guarantee, but don't be surprised with all this market drama, with all the worries, what's going on. And honestly, that's Trump's plan. I don't think people understand what Trump's actually up to here. He's up to a few things, but the main thing he actually wants to have happen is for the Federal Reserve to start lowering interest rates. He wants to see yields fall across the board when it comes to treasuries, across the board. And that means the Fed funds rate, that means the 10-year yield, the 2-year, he wants it all going down, okay? All going down, especially the 10-year, in my opinion. And so how do you get that? Get a lot of fear out there, get, inflation numbers down further, right? And ultimately get interest rates down. Now, despite everything that's going on out there, here today, public count, nicely green. It's been a nice green day for the public count, even with all the drama that's going on out there. Now, let me show you a message I posted for the private stock group members, because I saw sentiment. I still read through comments section on my videos, whether it's this channel or the other channel. I don't obviously get to see all the comments because it's a lot, right? The channels are fortunate to have a lot of subscribers, so it's a lot of comments. But I try to look through them and see a decent amount to get a gist of kind of, how people are thinking, how people are feeling out there and whatnot. A lot of people talking about selling my stocks. I just sold my stocks here today. A lot of that sort of talk. Not everybody's like that, but there's definitely a good amount of people. A lot of people, we're going to have a crash. Now, people that don't even do this for a living now, think they can call crash. They think they know they can predict what's going to happen with the stock market. Okay. Alrighty. That's fun. That's a fun game. Okay. This is what I said to the private stock group members. I said, seen a lot of, I sold my stocks today. I'm selling my stocks this week so I can raise cash and buy back in when the market's done going down. I said, good fucking luck to you. Every multimillionaire, billionaire investor, including myself, will tell you, don't time the market. You can't time the market. It's an impossible game to win, and your returns long-term will be worse. But people fall for the trap again and again and again. And you could ask any one of the greatest investors in the world, and they'll all tell you, dude, you don't try to time the market. Your returns will be worse over time. You can't do this, okay? But, quote, nah, brah, I'm a genius. I'll buy back in at the bottom or near. Good luck. There are times to take profits, times to buy heavy, times to hedge, to sell your portfolio and think you will time the market after a 13% correction in the NASDAQ, an 18% correction in the Russell 2000, a Russell 2000 that's lower today than it was 4+ years ago. All right, you do you. I'll hold and buy the dip. I did my profit taking at the end of 2024 and the beginning of 2025. I'm in buy the dip mode now. That's exactly where I'm at. And so, all these people that think, they're more intelligent than me. They're more intelligent than Warren Buffett. They're more intelligent than Peter Lynch. They're more intelligent than all the people that got millions and millions and billions of dollars. Yes, they're all smarter. Yeah, those people think they're going to time the market and get in, get out, and buy at the right time, and then get back out again, and then get back in again. Come on, man. Come on. There's a reason. Everybody that's educated on this will tell you don't freaking do that, okay? Because you don't do that. Even if you get lucky this one time, which you'll need luck to actually pull it off, even if you get lucky that one time, you're going to fail. You're going to fail because you're going to try to do it again. Because why would you just do it one time? Why not do it the next time? I mean, you're such a genius. You could time the market and get out and get in at the right time. Guess what? If you're selling everything now, you're already not very intelligent. Think about it. You're selling after the Russell's gone down 18%? Now you're going to sell all your stocks? Wait a minute. Wait just a minute. Why didn't you sell back months ago. Because you didn't know the market was going to fall a lot. Oh, but now you think you know what the market's going to do when you didn't even know what the market was about to do? Come on, man. Like, come on. But this is what happens to people time and time again. They think they can time the market, and it's just, it's such a ridiculous situation, right? So yeah, people can go out and sell all their stocks and do whatever they want. It makes no difference to me. I'll gladly take your shares away. At the end of the day, I'm in the game of I need to get as much ownership of the world as I possibly can, right? Other people are playing these games of gambling money. It's just a different mentality, right? And there's a reason my 5-year returns in the public count are ridiculous. Like, we're in a whole different stratosphere versus S&P 500. And other people have trouble even beating the S&P 500 over a 1-year basis. You got to understand how to play the game. And too many people don't understand the way to play the game. And it's going to cost them heavily, okay?